Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
If you're responsible for your company's retirement plan, listen up. The IRS has just dropped its new mandatory to-do list. In this explainer, we're going to break down exactly what Notice 2025-60 means for you, what you need to update, and, most importantly, by when. So, here's how we're going to tackle this. First, we'll look at this new list from the IRS. Then, we'll unpack how their whole amendment system works. Next, we'll get to the single most important date you need to know. After that, we'll dive into what's actually on the 2025 list. And finally, we'll cover what you as a plan sponsor need to do next.
All right, first up, the IRS's new to-do list. Let's get right to the heart of what this notice is and why it's so critical for keeping your plan on the right side of the law.
You know, this is the one question that every plan sponsor should be asking themselves right now. I mean, with all the massive changes from the Secure and Secure 2.0 Acts, it's really easy to feel like you're falling behind. And the IRS gets that, which is exactly why they issue these updates. Think of this notice as the official starting gun. It spells out the specific, mandatory changes that most qualified retirement plans, including 403Bs, have to formally write into their plan documents. This is all about maintaining that crucial tax-favored status with the IRS. Now, you might be thinking this is just a random list of chores the IRS cooked up. But it's not. It's actually part of a very structured system, and it's designed to help plans stay current without creating total chaos. So let's pull back the curtain on the why behind all this.
The key concept to wrap your head around is the remedial amendment period. It's a fancy name, but really, just think of it as a grace period. When Congress passes new laws, the IRS gives you this window of time to formally update your plan documents to match how you've already been operating. It's a safety net to make sure you don't accidentally get disqualified.
You know, the best way to think about this whole cycle is like a mandatory software update for your plan. Seriously, Congress passes a new law, that's the new operating system. The IRS then issues guidance, and this required amendments list, that's the official update patch. And once it's released, the clock officially starts on getting it installed. And speaking of the clock starting, let's talk about the single most important piece of information in this entire notice, the deadline. If there is one date you circle on your calendar from all of this, this is it. There it is. The critical date is December 31st, 2027. For every single thing on this 2025 list, you have until the end of 2027 to get those changes formally adopted into your plan document. And this applies to pretty much every plan out there. This timeline really puts it into perspective, right? The IRS just fired the starting gun here in 2025. So you have all of 2026 and all of 2027 to get this done. It's not exactly a fire drill for tomorrow, but trust me, that deadline is going to be here before you know it. Okay, so we have our deadline, December 31st, 2027. Got it. But what exactly is on this list? What are the specific updates we need to be making? Let's dig in. The IRS is pretty helpful here. They organize the list into 3 parts to make it a little easier to digest. Part A is the big one. These are the changes that almost everyone needs to pay attention to. Part B is for plans that have very specific or kind of unusual language. And Part C is for changes tied to optional features a plan might have adopted. So Part A is definitely the main event this year. It officially requires plans to amend for the huge changes to required minimum distributions, or RMDs, that came out of the first Secure Act. This means you have to formally update your plan document to reflect the new, later starting age for RMDs. And, this is a big one, the elimination of the stretch provision for most non-spouse beneficiaries. That rule completely changes how inherited accounts are paid out. Part B is, well, it's a lot more niche. It deals with these really complex attribution rules for figuring out if different businesses are part of a controlled group. The IRS even says this will only affect plans with unusual provisions. So for the vast majority of you, this probably won't apply. And what about Part C? Good news. It's empty. The IRS looked at it and decided there are no required amendments this year related to optional plan features. Simple as that. Now, this is a really key point because it's about what's not on the list. The RMD changes from the first Secure Act, They are on the 2025 list. But what's missing are some of the huge Secure 2.0 changes, like that mandatory Roth catch-up rule for high earners. The IRS is signaling those will probably show up on a future list, which means we all have more time before that amendment clock starts ticking.
All right, let's bring it all home with a clear action plan. We've covered the what, the why, and the when. Now let's talk about what you actually need to do about it.
Here is your game plan, your checklist. Step 1, figure out exactly how your plan is affected. And just remember, those RMD changes in Part A are going to hit almost everybody. Step 2, do not go it alone. Talk to your third-party administrator, your TPA, and your ERISA legal counsel. They live and breathe this stuff. And finally, step 3, get a timeline in place to have those formal amendments signed, sealed, and delivered well before that December 2027 deadline. And I want to leave you with this direct quote from the notice, because while your providers and advisors are there to help, at the end of the day, the ultimate legal responsibility for getting the plan amended correctly, well, that falls squarely on you, the plan sponsor.
So I'll leave you with this final thought. Your plan is probably operating correctly today based on the new laws. But compliance isn't just about what you do, it's about what your official plan document says. The clock has officially started. So the real question is your plan's paperwork truly ready for 2027?